friend, welcome to the program Gyan Se Kalyan. Myself, Dr. Baidyanath Ram Prajapati, Associate Professor. We are discussing accounting basic. Today we are going to discuss provisions and reserves and what is depreciation provisions. Very important. So join and enjoy. So here, very small question is what is provision? There are certain expenses losses which are related to the current accounting period, but amount of which is not known with certainty because they are not yet incurred. So it is necessary to make a provision for such items for ascertaining true net profit as per the principle of prudence and conservatism. So here some of the examples of the provisions are given. Provision for depreciation, provision for bad and doubtful debts, provision for taxation, provision for discount on debtors, provision for repairs and renewals. Another very important question is how provision is created. Creation of provision ensures proper matching of revenue and expenses and hence the calculation of true profit. Provision are created by debiting the profit and loss account and crediting the provisions account. How the provision is treated? Provision may be shown in two ways, either by way of deduction from concerned assets on the asset side. For examples, provision for doubtful debt is shown as deductions from the amount of sundry debtors and provision for depreciation as a deductions from the concerned assets. On liability side of the balance sheet along with current liabilities. So this is the another treatment when the provision is created, like provision for taxation and provision for repairs and maintenance. Another very important part, what are the accounting treatment for provisions? Debtors may be of three types: good, bad and doubtful. So possible the amount of credit given is a certain loss. Doubtful debts are those debtors who may put but business firm is not sure about the collection of full amount of them. For creating provisions, there is a journal entry, profit and loss account debit to provision for doubtful debts account. Another very important, what is reserve? A part of profit which may set aside and retained in the business to provide for certain future needs, like growth and expansion or to meet future contingents such as workmen compensation. So here some examples are general reserve, workmen compensation, investment fluctuation fund, capital reserve, etc. The another very important examples are dividend equalization reserve, reserves for redemption of debenture. Reserves are the appropriation of profit to strengthen the financial position of business. Here, reserve is not charged against the profit, but it is only the known liability and we are creating it. Another very important question is, what are the difference between reserve and provision? The point of difference are here, the basic nature. A provision is a charge against the profit, whereas reserve is appropriation. The next one is the purpose. Provision is made for the known liability expenses. On the other hand, reserve is created for strengthening the financial position. Some provisions and some reserves are mandatory under the law. The third one is the presentation in the balance sheet. Provision is shown either by way of deduction or we are showing it on the liability side. On the other hand, reserve is shown on the liability side after capital. Effect on taxes, taxable profit. Provision is deducted before calculating taxable profit. Hence, it reduces taxable profit. A reserve is created from profit after tax and therefore it has no effect on taxable profit. Another very important one is element of compulsion. Creation of provision is necessary to ascertain true and fair profit or loss in comparison with prudence or conservative concept, it has to be made even if there is no profit, whereas creation of reserve is generally at the discretion of the management. However, in certain cases, law has stipulated for creation of a specific reserve like debenture redemption reserve. The next difference is used for payment of dividend. Provision cannot be used for distribution as dividend, while general reserve can be used for distribution of dividend. The next question is very important. Provisions and reserve. So at the balance sheet date, the balance of the accumulated profit for depreciation account is. So here answer is provided. You test your knowledge yourself. Again, what are the types of reserves, my dear friend? The general reserve, a specific reserve. So here the some examples of the specific reserves are dividend equalization reserve, workmen compensation fund, investment fluctuation fund, debenture redemption reserve are the main examples of a specific reserve. Another, what are the causes of depreciation? The term depreciation means decline in the value of fixed assets due to its usage, passage of time, or obsolescence. Here, fixed assets technically referred to as depreciable assets tend to reduce their value once they are put to use. So here a very simple meaning of depreciation is provided. Depreciation is described as a permanent, continuing, and gradual decrease in the value of fixed assets. So, what is the revenue and capital reserve? This is the two basic difference of reserves, the revenue reserve and the capital revenue. So, what is revenue reserve? Revenue reserve are created from revenue profit, arises out of normal operating activity of the business and otherwise freely available for distribution of dividend. Here the some of the examples are given for revenue reserve like general reserve, workmen compensation fund, investment fluctuation fund, dividend equalization reserve, debenture redemption reserve. On the other hand, capital reserves are created out of capital profit. So these are used for writing off capital losses like issue or issue of bonus shares in case of company. So here some of the examples of capital profit are given: premium on issue of share or debenture, profit on sale of fixed asset, profit on redemption of debenture, profit on revaluation of fixed asset, profit in prior incorporation period, profit on reissue of forfeited shares. So another very important question we are going to discuss: what is secret reserve? So importance of reserve: meeting a future contingency, strengthening the general financial position of the business, redeeming a long-term liability like debentures. So here meaning of secret reserve. Secret reserve is a reserve which does not appear in the balance sheet. It may also help to reduce the disclosed profit and also the tax liability. So when we are charging depreciation is a non-cash item. So that creates a secret reserve. What are the features of depreciation? Very important characteristics. Management may restore to creation of secret reserve by charging higher depreciation than required, as we have discussed. Secret reserve can be created by way of undervaluation of inventory, charging capital expenditure to profit and loss account, making excessive provision for doubtful debts, showing contingent liability as actual liability. So here Note is provided. This is the precautions. Creation of secret reserve within reasonable limit is justified on the ground of expediency and prudence, but not so excess. So here, a small question is provided. You please try yourself and check your knowledge. Another very important MCQ is provided. Some of the answers are also given. You may compare it. Again, another very important questions. You must try it. Again, the terms which we have used are depreciable cost, original cost, useful life, depletion, obsolete, amortization, salvage value, and like this provision, reserve, meaning of depreciation as we have already discussed. So here the provision and reserve differences are provided. The provision is charged against profit and reserve is an appropriation against the profit. So secret reserve when total depreciation charge is higher than the total depreciable cost, a secret reserve is created. So another very important question is what is written down value method. Under this method, depreciation is charged on the book value of asset. Since book value keeps on reducing by the actual charge of depreciation, it is also known as reducing balance method. This method involves the application of predetermined percentage rate of the book value of asset at the beginning of every accounting period to calculate depreciation. Another is what are the method of recording depreciation. So here, my dear friend, we are going to have the journal entry charging depreciation account when we are creating provisions. So when we are charging depreciation, depreciation account is debited and assets account is credited. When we are creating and when we are transferring it to the profit and loss account, profit and loss account debit to depreciation account. Another very important part is provision for depreciation account. So when we are making the provisions under this, assets account continue to appear at its original cost and depreciation is accumulated and shown it in the balance sheet separately. Balance. So the provision is shown in the liability side, and here is important journal entry depreciation account debit to provision for depreciation account and for charging in profit and loss account or transferring it to the profit and loss account, provision PL account debit to depreciation account. So my dear friend, here is a brief introduction about the trust. So you enjoy it and you relax. Thank you very much.